Hi everyone, welcome back to the channel. Today we are diving into one of the most important yet often overlooked aspects of trading volume. What is it? Why does it matter? And how can you use it to make better trading decisions? So what is volume is in trading? In simple terms, volume refers to the total numbers of shares, coins or contracts trading during a specific time period. It reflects how active or liquid a market is. For example, if a cryptocurrency has high volume, that means a lot of people are buying and selling it. Why is volume important? High volume means easier to enter or exit position without affecting the price much. Strong market is interest and higher trader confidence. Often sports price stability or confirm strong trades. Low volume means fewer participants. Buying or selling become harder. Price can be more easily manipulated by a big trades. Greater risk and potential volatility. How can you read volume? Most trading platforms show volume of vertical bars below the price chart. Roller bars, higher trading volume. Shorter bars, lower volume. Watch for more volume spike during price movements. It's often a sign of a big traders entering the market of strong buying selling pressure. Final tip. Assessed with constantly high volume are generally safer to trade. They offer better liquidity, tighter spread, and lower risk of sudden unpredictable moves due to lack of interest. So before entering any trade, always check the volume. It's one of the simplest yet most powerful indicators of market strength and reliability. If you find this helpful, don't forget to like, subscribe, and hit the bell icon for more smart trading